Hello. Once again, you are welcome to BNJ FS Academy. My name is Better Jonathan. Today, we'll continue from where we stopped our previous class. Please, if you find this video interesting, don't hesitate to subscribe to our YouTube channel. So should in case, if we drop any video of this nature, you will be among the first set of persons that will see the video. And in our last class, we said we will start from a trading session. We start at trading session. This is where we'll stop last week, and we promise to start from this place. And remember, in our previous class, we said that the market, Forex market itself, have a different session of trading. One of the mistakes some persons always make is this: they just open a Meta 5 platform or that of Meta 4 platform, where you have a pair currency. They start trading instead of trying to see the session that is in the market at that juncture. Not all sessions that will be in market at the same time. So you must understand the session. For example, you want to trade USD versus Euro. You must understand that is USD versus Euro are they on session or not? So if they are not on session, the market will not be volatile. If they are not on session, the market will not be volatile. So you must understand if the two countries' markets, if they are on session, before you start trading them. That is the reason why in pair currency, sometimes you see the market moving slowly and all that, until immediately they come, the two countries that you want to trade their currency, immediately they're on session to trade, you can start trading the market. And we also in our last class, we also said that the market is open 24 hours a day, 5 days a week, and has different sessions depending on what time it takes. The market have different sessions. So for those of you that will be trading on a pair currency, you must understand that the market have sessions. Unlike those of us who trade volatility. Volatility doesn't have any session. You can trade volatility at any given time. So you must understand that in Forex market, it has different sessions. And here we said, here are various trading times and trading sessions in Forex. Sunday open by 9 p.m. GTM. Tokyo open by 11 p.m. London open by 7 p.m. Frankfurt open by 8 a.m. So London open by 7 a.m. Frankfurt open by 8 a.m. while New York open by 1 p.m. Yes. So all session lasts for 9 hours For example, if Sunday opened by 9 p.m., count from 9 p.m. to 9 hours. If Tokyo opened by 11 p.m., count from 11 till next 9 hours. So you must understand when the market opened in order you to know when to trade. Please, if there is any question, don't hesitate to drop it at the comment box. We said all session lasts for 9 hours. Anytime the market starts, count from 9 hours. So having known their opening time, to get appropriate closing time, just add 9 hours to the opening time to get when they would close. So they have opening time and closing time. So you must understand when they are opening and also when they are, closing. Though it's important these sessions names are driven from the major city in which most of the transactions are done. For example, Sandy session represent Australia and other countries around that time zone. Tokyo session, sometimes called Asian session, represent Japan and some of the Asian countries. London session represent the United Kingdom and the countries within it. Frankfurt, which is the Germany, represents Europe. New York session represents America. So these are the session, the country the session represents. Like we earlier said, Forex is actually a 24 hours market. It is most at times regarded as the market that never sleeps because it is open for 24 hours of the day, except on weekends. So no matter where you are around the world, no matter time zone, you can actually trade this large market. Please, in case you want or you need this manual, I will drop my WhatsApp number so you can contact and get this manual. So I want to leave you with this. These different sessions have their currencies. In our next class, I would want you in a WhatsApp, group. I want to give you an assignment now. Drop the currencies. Go and do research on it. I want you to do research on this. The currency that you will find within this session. The currency you will find within this Tokyo session, London session, Frankfurt session, New York session. There are currency you will find within here. So go home after this class, research on currency under Sandy session, research on currency under Tokyo session in that form. Submit it in our WhatsApp group before before the next class. Let's let's see types of order. In Forex, we have different types of order. Have different types of order, market order, take profit, stop loss, and others. But we'll be taking it one after the other. Here we said market order, and we said a market order is an order to buy or sell at the current market price. Market order is an order to buy or sell at the current market price. When we get to the practical aspect of this class, I will show you how market order look like, how to place market order and all that. But in respect to where we are now, we said a market order is an order to buy or sell at the current price. You want to go to market, you ask how much, they say 5 naira, and you want to buy it at 5 naira. You don't want to wait when the market go beyond 4 naira. So you want to buy it at that current price at that juncture. You don't want to wait when the market goes down before you buy or sell. You want to buy it at that time. So the next we'll have is take profit. Remember, we are trying to see types of order. Here we say take profit. We've treated market order. We also want to treat take profit. A level where you decide to exit or take or trade with profit. Maybe, for example, you have placed a market and you want to take your profit at a certain level. So at that juncture, what you need to do is to set it. When we get to the practical aspect of this class, I will show you how to set take profit. We also have stop loss, a level where you decide to exit a trade with a loss. Maybe the market has go against you and you want to leave the market. So you set that when this market gets to this particular place against me, please, the system or the system should help me and close the market. It's almost the same thing with that of take profit. When this market give me profit to this point, please help me and take my profit. Why stop loss is when this market get to this point against me, please help me and stop my loss. Let's see. Types of trading. Type of trading. We have fundamental analysis. And we say fundamental analysis is a way of looking at the market through economic, social, and political factors that affect supply and demand. This is mainly for those who want to be trading only per currency. But those of you that will be trading volatility, you'll be using technical analysis. While those of you that will be trading per currency will be using fundamental analysis. That means to say that, one, you need to know what the economic situation of a country you want to trade on. And we say in fundamental analysis, the trader analyze or predict the price of currency by events happening in the economy. So as a trader, it is less for you to predict the price of a currency you want to trade. That currency you want to trade. You look at the economy, the rate of the employment and all that. you'll be able to predict if truly this market is it favorable for me to buy or sell. If after prediction, the market is favorable for you to buy or sell, you buy or you sell. So here we say economy is the state of a country in terms of production and consumption of goods and services and the supply of money. So in pair currency, while trading pair currency, the economy of that particular country you are trading, you must understand it. You must know what happens there before you start, trading. And we said the state of the economy is what moves the market. That is in pair currency. But in volatility, it's not the state of the economy that moves the market. In volatility, like those of us that are trading step index, V75 and all that, one will understand that it is the big boys in the market, the individual, the big boys, the bank and other that is trading in the market that moves the market. But in pair currency, it is the economy of that particular country you are trading their money that's moved the market. The nature, the situation, if the economy is good, it means that you will, you know how to, predict the market. If the economy is also bad, you should also know how to, predict the market. Here we say, let me go back a little bit. You see, when the economy is good, the currency of that country moves high. And when the economy is bad, the currency of that country go down. So when the economy is good, it means that you should buy the market. That's when you will see market going up. And when the economy is bad, you will see the market, the pair currency going down. So you must sit down and analyze the economy of a particular country in which you want to trade their currency. Just until we get to the practical aspect of this class, I will do justice to some of what I'm saying now. And here we said, for example, if the economy of the US is growing, the value of the US dollar also grow when compared to other currency. It's as simple as ABCD. So just follow this class accordingly. You will understand what I mean. And if you miss out, refresh back, watch the video again. So, and you should know what fundamental factors like news and other information are what move the market. These are what move the market. So you must listen to news. Sometimes every 8 o'clock, if you're in Nigeria, you must listen to news to know the state of the economies of the US, Europe, Canada, and all that. You must listen to their various news to know what is happening. Is the economy good for you to buy? Is the economy good bad for you to sell? So you must understand all these factors. And here is where we see all the news. We see all this news on CNN, BBC, forexfactor.com, dailyforex.com, etc. So this is where you will see the happenings. I'm being transparent, showing you my manual, giving it out for you to see. But if you need it manually, you can also get in touch, with me. So as a trader, make trading decision based on the news released by the countries. So your decision, your prediction is based on the news released by that particular country. This is the nature of our economy. Is good, then it means that the market will be good to buy. Economy is bad, means that you'll be selling. So until you understand these factors in pair currency, you won't go far. But those of us that trade volatility, it has to do with technical analysis. They don't need any news to trade volatility like boom and crash. Please, if there is any question, don't hesitate to ask questions. Okay, okay, here is technical analysis. Technical analysis. This is mainly for those of us that will be trading, boom and crash, V75, V100, step index, and all that. So technical analysis is the study of a price movement. Technical analysis is the study of price movement. In one word, technical analysis equals to chart. So unlike that of pair currency, you analyze your market based on the previous happening. You analyze what will happen in the future based on what happened in the past. So in technical analysis, we study the movement of the price as its form patterns and trend that make us make future prediction. So it is the happening in the past that make us take decision in the present. So that is what happened in when you are trading boom and crash. You use the past to judge the present and predict the future. Don't know if I'm making sense. So we use tools like indicator, point, trend lines, etc. When we get there, I don't want to confuse you. I want to take this class precept by precept. When we get to practical aspect of our technical analysis and fundamental analysis, you will see it yourself. So I just want you to get the foundation of this class. Okay. Let's see currency pairs. Currency pairs. For those of you who have MT5 or 4, if you don't have, you can download MT5 or MT4 in your app to see how currency pair looks like. When you open, you will see neither GBP/USDT. So you will neither see GBP/USDT. Let me show us how currency pairs look. Please hold on. So we said the first in currency pair, the first currency, just like we said in our previous class, the first currency within the pair is called the base currency, while the second currency within the pairs is called the quote currency. The quote currency. I don't know if you can see this. Maybe don't worry. In our next class, I will make it visible to us. But what we're trying to say is that when you open your MT4 or MT5, depending on the broker you are using, you will see you will see a pair of currency in this form. Euro versus USD versus Euro, JPY, and all that. You will see it in this one. So what we are trying to say in essence is that this first one here is called the base currency, while this USD is also called the quote currency. If the USD is here and this JPY is here, the USD at that juncture will be called the base currency, while the one here will be called the quote currency. The first currency, GBP, is the base currency, while the second, the USD, is the quote currency. While the number in front is the price that the pairs is quoted. This is the number they are telling you of. Say, okay, maybe when you open your MT5 in our next class, we'll do justice to that. We'll show you the number they are referring to. But anytime you see a pair currency, when you open your MT4 or MT5, there must be number. So those number is what they are referring. Why the number in front is the price that the pairs is quoted. Here we say normally the base currency is stronger than the quoted currency, but there are few exceptions where the weaker currency is quoted as a base currency, like AUD/USD. One should know that USD is stronger than Australian dollar. We all know that USD is stronger than the Australian dollar, but it is quoted first. In such case, the price starts with 0.6. Don't worry, we'll get to practical aspect of it. Everything I'm sure I'm teaching here now, we must surely see it in practical aspects. So I just want to do the theory first until when we get to the practical aspect of this class. Let's see price action. What is price action? Price action is a trend technique that follow the trader, that allow the trader to analyze the market and make subjective trading decision based on past or present price movements. You must understand this if you want to be a good trader. Price action is a trading technique that allow the trader to analyze and the market and make subjective trading decision based on past and present price movement. So you must understand price action. We'll also have the practical aspect of it when we get there. We'll say price action trading, you use tools like chart pattern candlestick pattern, trend line, support and resistance, and many more. I think we'll stop here. We'll stop here, price action. Maybe in our next class, we'll start from price and charts. This is where you get some of the practical aspects of this class. But I think we'll stop at price action. In our next class, we'll start with this. Thank you very much for being there for us. Please, if you find this video interesting, don't hesitate to hit the subscription button. Check down on this YouTube. You will see the subscription button. Just click there to subscribe to our YouTube. So should in case we drop any other video, you'll be the first to get it. Thank you very much. And please, if there's any question, don't hesitate to ask, to drop your question at the comment box. Thank you very much. And for those of you who might be needing be in need of this material, please you will also indicate. Don't fail to hit the subscription button. Thank you very much. See you next time.